All right, hey traders, Dr. Barry Burns here with Top Dog Trading, and here's our video newsletter for this weekend. So today we're going to talk about triangles, and haven't talked about triangles for quite a while. I used to be very well known for triangle trading. It was when I ran a chat room, I was the triangle trader, and tried to teach everyone else in the chat room how to do it, and few people picked up on it. Most people had a tough time with it, quite honestly. So I just tend to see them. A lot of people don't. For me, it seems easy and obvious, but to others, evidently, it's more challenging. So it's kind of a visual thing. Well, it's definitely a visual thing. And I'm going to share with you what I look for and how I do it. So, and if it resonates to you, great. If it doesn't, well, that's okay too. Then just trade other things. But I like triangle trading. So, in fact, I did some of it today. And today being Friday, August 10th, when I'm recording this. So, all right. So here we go. NQ. This is actually pre-market. You can do some of this stuff pre-market if you want to. It's definitely riskier. People ask me all the time, do you trade pre-market? Generally, I don't too much, but I have been known to do it. I used to do it more than in the past than I do now. But anyway, so here, basically all we're doing with triangles is we're connecting cycle highs. So you look for your cycles here in your cycle indicator, and your cycle lows, cycle high to cycle high, cycle low to cycle low. And that's it. So you just draw those lines. Okay, and that's how you identify which lines, or where those lines are. I don't call them trend lines. Some people call them trend lines, but to me they don't indicate trends, so I don't call them trend lines. I'm just simply connecting highs and lows, and they define which highs and lows to connect by looking at my cycle indicator. So, okay, here we have a descending triangle. Now, a lot of people tell you, and traditionally, a descending triangle is supposed to break to the downside. Ascending triangle is supposed to break to the upside. I give that zero credence, absolutely zero. There's been statistics run on it and so forth. Most of the stats, if you do look at that, they've been run on daily intervals, daily chart intervals. I still don't give it any credence, but market can do anything at any time, so I just look at what it's doing. Primarily, the way I decide which way to trade a triangle, long or short, whether it's ascending, descending, or symmetrical, is which direction mom is angling on the next higher time frame. That's how I determine which way to trade the breakout of a triangle. The other thing is, there's generally three ways to trade. Let me actually just do this on a blank spot on the chart here first. Okay, that'll suffice. So let's say this is our triangle. Again, doesn't matter what type it is. Okay, so now I'm going to change color, change it to blue, and use our price action. So here what you'll have is you'll have something like that, okay? Oh, and this will be like that. So the essence of a triangle, this happens to be a symmetrical triangle, so you'll have a higher low and a lower high. You need to have 2 price points for highs and 2 for lows before you have a triangle. Now, you can trade aggressively or conservatively. An aggressive trade on triangle, well, let me define the 3 ways to trade it, first of all. One would be trading what I call inside the triangle, and I'll often do this. Inside the triangle means that I would take and actually short, for example, here, this high, if mom on the next higher time frame is angling down at that point. All right, so that's one option. That's the most aggressive option. It also gives you the best risk-reward ratio, gets you in earlier than most people. That's option 1, is to short right off of this high. Number 2 is to trade the breakout. As it breaks out here, then you enter on the break of the trend line. Okay, and that's what some people do. Obviously, you're getting in later. On the other hand, you're getting out on more confirmation that the triangle now has been broken. Otherwise, the triangle could continue, right? Third option is you wait for a what's called not just a retrace, but really a throwback, where the market breaks out, and it often will then come back into one of these lines, if we extend these lines out, and then wait and then enter short as it comes into this resistance area. That's the most conservative approach. It's a good approach. The problem is, the downside is that you don't always get a throwback. Sometimes it just breaks out and it doesn't throw back at all. It just keeps going down. So in that case, you have an opportunity lost. That's really the biggest risk on that, although all throwbacks don't work either, obviously. So those are 3 approaches. Okay, you can, let me just, for the sake of clarity, you can short here, you could short here, or you can short here, and obviously everything's reversed just for the long side. Okay, now I tend to like to do this trade inside contraction. Now, when you do that, the earliest you can get in would be here. Now, the problem with that is, again, it's very aggressive, and it's the first, the problem is it's the second high, the first lower high. So you don't actually have a confirmation when you enter that that's going to be the cycle high, right? And so that's the problem. It might not be. Maybe it'll go like that and then it'll wiggle up higher or something like that. And you may not have a triangle pattern at all. So that's the risk on that. Now, if a more conservative way to trade the inside the triangle pattern is, let's say we get a, that's fine, we'll use red. We'll go backwards this time. Doesn't really matter. Okay. Oh, whoops, sorry. Messed up. Gotta start all over again. Okay. Tool, line, color. Okay, we'll go back to black. So, and then we use blue for our price. Okay. Now, boom, 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 and we had already had that boom. So we have here's the issue. Two confirmed cycle lows, 1 cycle high, and 1 lower high that's not confirmed yet entering there. Now, that's risky because, like I said, this may end up not being a cycle high, right? Because we're entering before it's confirmed. We always enter before it's confirmed. Now, if this were to go down and then go back up, now this would be a safer entry to go long. Why? Because we already have 2 confirmed cycle lows and we got the higher low. All right, and we've got the 2 confirmed cycle highs and we got the lower high. So, point is, at this juncture now, with 2 confirmed cycle lows and 2 confirmed cycle highs, lower high, higher low, we have a confirmed triangle pattern. You do not have a confirmed triangle pattern until you have the 2 confirmed highs and 2 confirmed lows. So the safest time to trade inside of a triangle is after you have 2 confirmed highs and lows. Then enter here, for example, and bouncing off the trend line. Then you know you've got a triangle. Then you know for sure you have a triangle. Now, the problem, the downside with this one, well, it doesn't always give you 2 confirmed highs and 2 confirmed lows. Sometimes that's all the triangle does is, 2 confirmed lows and 1 confirmed high, and then you got to get in on the next lower low, or the next lower high. Otherwise, there's not going to be another one. Okay, so that's the issue. Now on this one, you see, we have a high and a lower high, both confirmed, a low and an equal low, confirmed. Then when we go to here, we've already got our two highs confirmed and our two lows confirmed. So the descending triangle is confirmed by the time we look to take this trade. We look over at our next higher time frame, and indeed, mom is angling down on the 600 tick chart on the left, and that's why I would go ahead and take that trade short. Okay, now here it breaks out, right? Here's our lower horizontal level. Looking at the 200 tick chart again, all right. Breaks down, comes back up. There is your next opportunity. That's your throwback. All right, that's your throwback. So let me, all of them are confirmed, by the way, on the longer term chart. So let me just bring up my drawing tool here again. And this time I'm going to use a different color because we've already got blue on there. Already got, well, what color am I going to use here? I need something different. Cyan, I guess I could use magenta. Yeah. Let's use the cyan because there's no cyan on there yet. Okay, so we've got two confirmed highs, two confirmed lows. Then this would be a conservative trading inside the triangle short trade. Breakout would be trading like right in here somewhere. Throwback, wait till it comes back up. Okay, fine, and support becomes resistance, and then trade there. And sometimes you can even wait until, you know, something like over here. Now it's gone beyond the triangle lines, but it finds resistance with 15 EMA. So, but you can see how this entry is the best in terms of the best price. You're shorting, so you want a short high. You're shorting from the highest price. Here you're getting lower prices. These are probably going to be roughly the same. In here you're even getting in at a lower price. You're getting in late. Not necessarily late, but later. Later. All right. So that's how that works. Those are the three approaches to trading a triangle that I have seen, that I've witnessed. And again, all three are valid. There's no one that's, you know, definitely the best. They all have their pluses and minuses. And, you know, look for them, try them, and see which ones you like the best, the ones that fit your personality the best, the ones you feel most comfortable with.